One beautiful thing when it comes to trading is that, well, you can never stop winning, provided you are doing the right thing at the right time, even though you might fail once in a while. A few days ago, I actually made over $2,000 from 3 separate trades. Yes, you heard me right. I made over $2,000 from 3 separate trades trading with my LiteFinance broker. And when I posted a screenshot of the trade, someone actually requested me to actually do a tutorial sharing how exactly I came up with the trade, what influenced the trade, how I do the setups, and a lot of that before actually taking the trade. And in this video, I'm purposely going to share with you my simple trading setup that I would say is one of the most simplest trading strategy you can ever trade out there. Now that aside, now let me just go to a different market and then do a clear trading setup for you using my trading strategy. That actually made me over $2,000 within that period. Now you can see it's the same strategy I use over here, and luckily this is one of the trade that I just closed last week. I even dropped it in my VIP community. You can see this is a solid 1:10 risk to reward. Now let me go show you. Okay, well, this is another recent trade I take, and guess what, this one is not even part of the $2,000 that I shared with you. You can see this was a solid 1:10 risk to reward on GBP JPY. Now I'm going to use this particular setup to explain the market, how I did the analytics, how I come up with it for you guys. Now let's go back. Let me just reset the chart. Now when it comes to my trading strategy, what we are looking for is basically simple. The first thing is simply we need to understand the market direction. Is the market an uptrend? Is it a downtrend, or is it a sideways market? Now when it comes to my trading strategy, we don't trade sideways market, we don't trade any other noisy market. We only look for clear market. So it's either the market is trading upward or it's trading downward. So we need to be clear of the direction before we actually take any position. So basically when I come onto the chart like this, I'll start from the 4-hour time frame. Now what I do on the 4-hour is simply I'm trying to know which direction is the market moving to on the 4-hour time frame. However, I strictly trade the 30-minute time frame, but then I like looking at the 4-hour to see if there's any other thing I need to look for before I take any position. So now looking at this market on the 4-hour time frame, we all can agree that what the market is actually in an uptrend. Why is it in an uptrend? Because over here we had a market shift to the upside. Okay, so let me just take it from behind here. At the back here, we had a market shift to the downside. You can see market shift to the downside, which shows maybe there is a bit of selling momentum coming in. However, few days on, we had a market shift to the upside, which now shows that what the market is now in an uptrend. So we can be looking for buys, because here's a market shift, which means this one here is no longer valid again. Now the only valid one here is the market shift to the upside. Now the 4-hour has shown that what our last market shift went to the upside. Now for those of you who don't know, market shifts and breakup structures are the same thing. I call them market shift, others call them, market shift and the change of character are the same things. I call them market shift, others call them change of character. Now after that, the next thing is basically a breakup structure. Now once we have a market shift and a breakup structure in the recent market momentum on the 4-hour time frame pointing to the same direction, we basically know that what the market is in an uptrend, so we should be looking for buys only. So this sort of market, no matter how the market appears, I'm only more interested in the buying aspect. Why? Because we can see that the market is trading to the upside. So if it's going upward, why should I be trying to sell it? So if you're a trader out there, we often try to challenge the market direction, then you need to stop it. Look for a higher time frame. Like for me, the 4-hour happens to be my highest time frame. So once the 4-hour said, hey bro, I have a market shift and then a breakup structure to the upside, I'm saying, okay bro, thanks for the information, I'm only coming to buy. Now if the market said, bro, have a market shift and a breakup structure down to the downside, and I'll be like, okay, I'm coming to sell. But then when the market said, hey bro, have a market shift to the upside, but now I've had the market shift to the downside, which side are you trading? I'll just be like, bro, I'm not trading this market. You had the market shift to the upside, right now I'll show me a market shift to the downside. Anyways, I'm going to wait for you. Give me a breakup structure. The direction you print a market shift and a breakup structure in the same time frame together, that is the direction I'm going to trade. Now this is basically how I communicate with the market. So I don't rush my trade, I take time to take my position. You see, I don't trade on Mondays. Even when I see a good setup, I don't trade. Why? Because my rules told me not to trade on Monday. Now basically once I see this direction like this, the next thing I do is simply I jump over to the 30-minute time frame. Now the 30-minute time frame, what I'm doing here is simply I'm looking for unmitigated supply and demand levels. Now what I mean by unmitigated supply and demand levels is basically, these are areas whereby there is likely to be a buying or selling momentum. Now in this situation, the market is in an uptrend, which means that what we are looking for only demand levels, which is areas whereby people are interested in buying this market, and that is exactly what we are after. So for that reason, I'm basically going to look through and then look for a clear demand level here. Now when I say unmitigated, simply a version level, a level that has never been touched by anybody, meaning the level is not pregnant yet. Now if we look into here, it's clear that on the 30-minute time frame, we had a sharp market shift here to the upside, right here. Here is the market shift to the upside on the 30-minute time frame, and then we had breakout structure here, breakout structure here. However, I've seen some demand levels here, but then they don't really look strong. Like for example, here is a clear demand level. I trade the one candle levels. So basically, if I'm marking my demand level, I have to use the last gray candle, which is the bearish candle, before the bullish momentum, which is the blue candles on my chart, to determine it. So for example, if I should zoom in right now, this area actually suits to become my demand level. Now you see this area here, which is this last bearish candle before the bullish momentum, actually matches my demand level criteria. Now what are the criteria for my demand level? The criteria are simple. Number one, there should be a decisive movement from the level, meaning after the market left the level, no any other thing has come back to temper with that particular level. And looking at this particular one here, you can see after this one here, no any other bearish candle has been able to come back to retest it. For this reason, this level is valid. And then the next thing is simply, I need to see a decisive movement. It's not a place like this middle here. If I see a level around somewhere like this, within this area here like this, I'm not picking it because it's just so noisy. And so if I see a level within here as well, I won't also pick it. Why? Because it's just a noisy place. Like for this particular situation, it wasn't noisy. The market came straight up, it went up, came down a little bit, and then took back its momentum to the upside. Now these are the sort of levels where I identified. However, this particular level, I won't trade it. Now you ask me, why won't I trade this level? The reason I won't trade this sort of level is basically because this week you see here, this level was broken massively. Let me show you something here. Now you see this week that is right here, create a room for liquidity. This place you see right here creates a room for liquidity. Now why does it create a room for liquidity? Now when the market comes back to this level, there's about 60% probability that the market will break this level to this particular week here. Why will it do this? Because this week here still need to be filled. The market needs to come back and fill it before it moves away from it. Now for this particular reason, I'm going to skip this level and we'll go to another chart and look for an opportunity. Now you see, when I see levels like this whereby I have every criteria for my trading level, however, the candle that qualifies the level, which is this bearish candle and this bullish candle, confirms the level. But in a case whereby there's a long week like this, like if the week was a little bit short, I would have considered it and taken it. But for the fact that the week is very long, which means it doesn't qualify to be among my levels, because the market might come here, maybe print a confirmation, I get in, they will come back and they sweep me out before it continue moving upward. Why? It needs to fill this liquidity, and at times it might just come in straight ahead, break the level, and then just go back again. But once the level is broken, I have no business with it. Now for that reason, I don't trade this sort of levels. Now the reason why I showed you this first is basically because I didn't even saw it coming, but immediately I saw it, I needed to make an example out of it. Now let me look for a different market to do a setup. Okay, so here is a clear market that we can actually use for setup. Now this market actually qualifies every single thing that will match up to our trading system. So guys, I had to pause this video and then go through my whole charts to see if I'll see a good market that I can actually use for the setup. And finally, I saw one market which is one of my favorite index, which is the UK 100, which is known as FTSE 100 index. Now UK 100 is one of the good, it's a very good pair. So if you are trading indices, index funds, I advise you try it as well. It's very great. Now taking a look at this market here, we all can agree that what the market, I'm on the 30-minute time frame, which is the time frame I personally trade. First thing we notice is that there's a market shift right here to the downside. Now here we have the market shift to the downside. Now the next thing we look for is simply we need a break of structure. Now for that, we had a break of structure right here to the downside as well. Now these two alone has qualified that what the market is on a downtrend, so we should be looking for opportunity to actually sell the market. Now to follow it up again, the market printed another break of structure right here. Now this is not just random break of structure, but then it shows that what the market is really to the downside. Break of structure. So let me remove the market shift tag. Now with all of this identified in the market, we can be sure of looking for selling opportunity. Now if we are trying to sell, what do we look for in the market? Since we trade just supply and demand, meaning if we are looking for demand to buy, then we are looking for supply levels to actually sell from. So for that reason, we look for our supply level. Now when it comes to my levels, remember the rules I told you earlier on for the first market I use as an example. Rule number one is to make sure that what the level actually has momentum away from it. Now when we talk of the momentum, here's the market here. You can see this area here like this had a very huge momentum. You can see it right here. So you can see the momentum right here on this level here. You can see the momentum right here. You can see how the market fell. Now once you see this momentum, it means that what there is a good level for us to also look for a trading opportunity from. Now after seeing this momentum, the next thing we look for is basically we look for what we call the demand level. Now after this, we look for the demand level. Now what qualifies my demand level? Now when it comes to identifying my demand level, the next rule is basically make sure the candle you're using to identify your level is smaller than the directional candle. Now what this basically means is basically in this situation I'm looking for a supply level. So if I'm looking for a supply level, what qualifies my direction is basically the last bullish candle before the bearish momentum. Now however, this last bullish candle, it shouldn't be bigger than the bearish candle that came right after it. In a situation whereby it became bigger than that particular candle, it means the level is invalid. Now in this situation, it's actually not bigger than it. We can zoom into it for you to see. You can see that what the bullish candle is not bigger than the bearish candle. So for that reason, we mark it out. Now this level has actually met up with two criteria so far. Rule number one is basically make sure that there's momentum away, and this shows that there was momentum away from it. Rule number two is basically make sure that the candle that qualifies your level is not bigger than your directional candle, and this one is not bigger than my directional candle. Another confirmation. Rule number three is make sure that there hasn't been any bullish momentum back to that particular level. Now 3 rules confirm there hasn't been any momentum back to it, which means the level is still not mitigated, which keeps it very fresh for us to trade from. Now rule number 4 is basically be patient and let the market come to you. Now after all of this, however, I still have one more thing to identify, which means a liquidity level, because if you can identify the liquidity level, then you become the liquidity. So in this situation, if you look closely, we have another supply level right here, which is very close to the market. And truth be told, there are so many traders out there that will look to trade from this level. Why would they trade from this level? It's closer to the current market movement, and for that reason, most people often see this place as areas to get a lot of beginners out of the market. So this sort of areas, we see it as our liquidity levels, because we know for sure that once the market gets here, it will be a sweeper. The market will just sweep it off and then shoot straight to the level at the top. Now for this reason here, this becomes our liquidity level. So I'm just going to mark it out with the dollar signs. Now this level actually meets up with all our trading criteria. Now once I identify the levels like this, the next thing I look for is simply my entries and exits. Where am I going to put my take profit? Where am I going to get into the market? And where am I going to set my stop loss? Now here is it. The thing is basically keep your stop loss right below or above the level. Like for example, if I'm to enter this market right now, my entry will be somewhere around here, because once the market gets to this level, I'll have to wait for the market to print confirmation, and that confirmation will definitely give me a bearish candle to show that okay bro, I'm selling off again before I go in. Now the next stop is simply my stop loss. Now my stop loss, I'll just keep it right below here. Now why am I keeping it right below here? Because if the market successfully breaks this level, it will surely keep going upward, and if it keeps doing that, even if I should stretch my stop loss to the next demand at the next supply at the top, it will eventually tap it. So for that reason, I just keep my stop loss right here. Now I have my stop loss here, my entry here. Now the next thing is simply my take profit. Now for my take profit, I have a simple rule: a 1:3 or more. Now once I see the market like this, the next thing I look for is simply I just look for a 1:3 level. Now here I have a 1:3 here. Now okay, this is basically a 1:4. Now this 1:4 becomes my official target. It becomes my first target. However, I don't take off all my trade at these levels. Now I have here as my first take profit. However, there is still room to the downside, so I'll just stretch it to this final and making it a 1:6. So here we have a solid 1:6 on this setup. Now once I have my setup like this, I will just go back, sit, relax, and then even work out. Basically, once I do my setup like this, I'm just going to set an alert. Now once I set the alert, I'll just leave it like that. I don't have to look onto my chart again until whenever my alert get triggered within a period of 2 weeks. Now I always give my levels about 2 weeks to mature. Anything above 2 weeks, I don't really trust the level that much again. So for that reason, once I have my setup like this, I wait for the market. Now once the market trade and then comes back to this level and then it finally taps the level. Once it taps the level, the next thing I do is simply I wait for a 30-minute confirmation. Now my confirmation is simple: the market gets to this level, provided that it doesn't break out of the level, I wait for the market to reverse back out. Now once it reverses, I wait for a 30-minute candle close to the direction I'm trading. So if I want to take a sell position in this situation, which means I'm taking a sell position, for that reason I'll wait for the market to give me a bearish candle facing downwards. Now once it gives me the bearish candle and the 30-minute candle closes bearish fully, then I will take the trade immediately. Once I take the trade, set my stop loss, set my take profit at the 1:6, even though my main outlook is the 1:3 here. I don't care, I'll just set my take profit here and then my main outlook is here. Once I do this and I'm off the chart, whatever thing the market brings to me, I will take. Now once it triggers, I just let it run. Now if you hit my SL, fine. If you hit my take profit, fine. However, I do check my trade either 1 hour in or every 2 to 4 hours. Now the reason why I do this is simply in case the market has moved into a decent profit and then it's trying to make funny movement. Like for the trade that I closed on $400 and $600 profit, those weren't my actual target. Why weren't they my actual? I had way longer target. However, when the market got to these particular levels, they started like they weren't giving that detailed movement that, hey bro, I'm still going to continue to this direction anymore. Now once I'm not getting that vibe, as long as I'm up 1:2, I will just go off. Because one thing when it comes to trading that a lot of you don't know is the ability to protect your capital is very important. So I always play the game of capital preservation first. So for that reason, once I notice that the market is trying to act funny and then I observe it, it's acting funny and I'm not really convinced that this market is going to continue trading to my direction, I will just take whatever thing it gives me at that point and then I go out. Now this is basically how I'm able to manage this trade. And for those of you who are watching this channel, this is basically the same strategy I've been trading since when? I've forgotten, because I don't change. I'm not those people who change strategies frequently. The only thing I change is the rules that governs my strategy. Like for example, at first I used to trade every Monday. I used to trade from Monday to Friday. Got to a point whereby my Mondays weren't really playing out as I expected. So for that reason, I had to back off trading on Mondays. You see, the market I told you is fine. It finally came over here, but then it's Monday. I'm recording this video on Monday, but you will see this video on YouTube on Tuesday, so you'll be able to actually take this trade. I'm sorry. So guys, but that aside, this is one of the most simplest setup that will actually generate you a lot of revenue as a trader. Basically simple and straightforward, no complication, nothing fancy, nothing really crazy added to it. So guys, this is all I have for you in this video. So if you are out there and you're actually looking for a very reliable broker to trade with, make sure you sign up to LiteFinance.org. They are the brokers I personally use. No rubbish spread, no unnecessary reasons to close your trade, and then they offer some of the best deposit and withdrawal options, and it's very fast and easy. Like basically almost every week I post withdrawal slips in my Telegram community. Now for those of you who are looking for signals to trade with, I'm actually giving 2 months free into my VIP. However, in order to join this 2 months free, all you need to do is simply join our Telegram community and then comment interested down in this video description. Down in the comment section, I'll give you a link to join our Telegram community, and then I'll tell you what you need to do to qualify to get my VIP signals for 2 months, 100% free for that, for those first 2 months. All you need to do is simply comment interested, and I'm going to reply to you with a link to join as well. So guys, with this already said, without taking much of your time, no need to further out this video again. Just use LiteFinance as your favorite broker, and also Blueberry Funded as your favorite Propfirm, because that is a Propfirm I have personally used. So guys, see you in my next video. Bye.